Back for another one.
And we're back.
In the house.
Hey, what's up, man? How you doing?
Good, man. Good.
Yeah.
Ryan Wheeler, United Residential Mortgage.
The man.
And my man.
Austin Coots with Compass & Key Group of Real Broker.
So what do you do?
I'm a real estate. Well, if you've been watching our previous episodes, I'm a real estate agent. I have a real estate team in Elizabethtown, Kentucky called the Compass & Key Group.
Yep.
And we sell houses.
That's what we do. We do mortgages.
Yeah.
So
there
to
you
help
go.
people buy those houses.
That's right. Yeah.
Not that many people can really buy cash anymore, I feel like. There's still, I was kind of shocked. I feel like I saw the numbers for last year, and it was still 30% of transactions were cash transactions.
Wow.
Which that kind of sounded high. I know that people during COVID, like right after COVID, people killed it on their house, and then they were able to go buy cash. But I was surprised to see last year that there was still that much cash, sloshing around to be able to buy a house in cash.
Yeah. I mean, we still see a fair amount of relocations. Yeah. So, I mean, I want to see
coming from the West Coast.
Yeah, I want to see what percentage of those like cash transactions are like relos.
Yeah, I bet it's high.
Yeah,
I would be willing to bet. Yeah,
it's got.
And the number that I saw, the 30% was just nationally. So that not just necessarily locally. So, but I bet coming to where we're at, in Elizabethtown, Kentucky, in that area, I guarantee you most of those are probably relos for sure. So. Funny thing is, man, I've wanted to talk about some content on the reload stuff sometimes, because there are certain circumstances where somebody that if they've got $500,000 in cash and they go buy a house for $500,000, that they might actually be able to make that money. It depends on how much time they got, but not buy that house in cash. Take some of that and actually invest it in the market. And actually take a mortgage out to where, you know what I mean. So you take a chunk out, maybe put 25% down on the house, and then take that rest of that money that you were going to put down on the house to buy the house in cash and actually put that in like an index fund or something, earning 10-14%.
Even with the index funds taking a hit.
Yeah.
Really?
Yeah. Oh, well, it's a long play.
Yeah.
That's what I'm saying. Like if you've only got a short window of time, then that maybe that doesn't make sense. But if you've got 10 plus years, I mean, the 10-year average, man, is still, 8 to 10% on some of these S&Ps. So.
I mean,
and they're going to take their hits now.
Yeah, lifetime S&P is best return.
Exactly.
But it's just funny that you mentioned that now, because we're towards the end of April. This has got to be a tough month to kind of sell that concept.
Oh yeah,
because everything's taking a hit.
But that's the funny thing is this is where people get confused. It's the same with houses though, man. People don't want to buy when they should be buying, and vice versa, right? So like right now is actually when you should be actually buying more index funds. When the stock market is taking a hit, or when the S&P's down, you should say, oh, I need to buy more, So same concept, like when rates are high, there's less buyers in the market, right? So when you have less buyers in the market, you have less competition.
Yeah.
So, but people don't do that. People want to wait for rates to be lower, but what they don't realize, when rates are lower, you've got more buyers, more competition. It drives up prices.
Yeah.
So people always want to buy when they do the opposite. You know what I mean? Like it's like,
well, there's a reason why those concepts exist, because most people kind of follow the herd.
Exactly. That's exactly what it is.
If you're trying to be a savvy money person, take a little bit more accountability for your life. You kind of have to go outside the norm, because if you're going to follow the mainstream, you're going to do your 9 to 5, you're going to put your money into the system, have a 401k, retire at 65 and live on a fixed income.
Right.
So you kind of have to think outside the box.
Yeah, absolutely. 100%, man.
Yeah.
But talk on the real estate side. So rates are still elevated. I'm still talking to people on a daily basis. What
are you seeing for rates now? I forgot to ask you that on the way
You're
here.
still touching right under 7.
Damn.
Right under high 6s on conventional stuff.
Okay. What are you seeing for VA?
They hit though when this tariff chaos hit a couple weeks ago, man. They breached 7%.
Ooh.
We're probably upper 6s is probably where you're looking on conventional mortgages.
What about
conventional
VA?
30s. Oh, you're mid 6s.
Mid 6s? Yeah. I'd say that's not bad.
No, it's generally VA tend to run about 0.5% lower than conventional.
That's such a great product. Is like the VA home loan.
And there's no doubt.
Yeah, for anybody who's kind of looking into home ownership that is a veteran or a service member.
If you have VA eligibility,
dude,
you would not believe. It's way more popular now than what it used to be.
Yeah,
but no joke, man. 10 years ago, like I would talk to clients and I would ask them that question, are you a veteran? They say, yes, absolutely. Have you ever used your VA? No, I have not. Have you ever owned a home? yeah, I've owned 3 homes.
Yeah.
You've never used your VA? And they're like, yeah, man, nobody ever brought it up.
Think 3 years ago when the COVID like purchase stuff was still going on. Like, I mean, we were still seeing low rates at the early parts of 22.
Yeah.
But there was this massive amount of like market competition, and VA home loans were still kind of getting dragged. You know,
they were, man. It was annoying. Mm-hmm. It was very frustrating.
Yeah.
You know,
I think that's a lot of the reason why people don't really gravitate towards it as much is because there's in some markets, particularly a stigma on it that it's just like, ooh, it's like a whole lot of stuff. But dude, we close VA home loans faster than half of the other ones.
100%.
You know, because I mean, most of the home buyers are going FHA. It's the same standard.
Same.
You know.
Exact same. And I think that the stigma, and it's funny because that stigma actually is somewhat industry based, right? Yeah. Like you've got sellers, so it's not the seller themselves, the actual, you know, the client or the consumer. It's the real estate agents. They get an offer. It's a VA loan. I don't know, VA. It's way harder on the appraisal. And, you know, and they're the ones. They're passing that info to their clients. Yeah. So these are why, like during COVID, we saw them getting pushed out. Like, we don't want to take this VA offer. Yeah. And I'm thinking, it does scrutinize the property a little bit more, right?
Than an FHA or than a conventional.
No, conventional. Sorry, than conventional. So it does scrutinize a little bit, but it's not, in my opinion, man. Like. It's not overkill. Well,
so the main difference, right, for those of you that don't know, and you can probably speak to this also after, is so conventional VA or conventional versus government-backed loan, because the VA, FHA, USDA, KHC, they're all government-backed loans, which what the benefit to those is there's generally competitive interest rates. And there's also either low down payment or no down payment options, right?
Yep.
Now, what comes with those benefits are some strings. Yeah. The main string that is attached to that loan product is the condition
of the property,
condition and type of property.
Correct.
Yeah.
So it's actually to. That's the thing. It's actually it's to the benefit of the buyer, right? The home buyer, not to their detriment per se.
Well, in the transactional sense, yes. So, but the reason why there was or maybe still is this stigma is because, for instance, when we talk about condition of the property, right? So it has a lot to do with, you know, chipped paint or railings. There's standards that the house has to be in to qualify.
Yep.
And so I guess I boil it down to buyers and sellers as for a conventional home loan, they look at the same things. They see them and they annotate them. So they look at the same things that they look at for a VA home loan. But the difference is that safety concerns or safety hazards.
Health and safety.
Yeah, health and safety is up to the lender for the conventional home loan. So for instance, if there's chipped paint or there's not a railing or there's some sort of like siding issue, then the lender, based off the institution that you're getting the home loan from, will make the call on whether or not they'll allow it with no repairs.
Yeah, can be. Yeah, there is still a little bit of Fannie Mae, Freddie Mac backing behind all that. Mm-hmm. So
but for the VA, FHA government loans, all of this health and safety stuff, it's non-negotiable. It has to be repaired by the seller. No, there's no middle ground there. With conventional, you get a little bit of wiggle room, and that's where the stigma comes from.
Yeah.
But if you're not going VA, most home buyers are going FHA.
Yeah.
I've seen very few home buyers, especially this year, go conventional. I think we had one. So that stigma is just it's a lot of snake oil.
Yeah.
You know.
Yeah, it is. And I think that, I think that what happens is the majority of home loans originated actually are conventional, though, believe it or not.
Oh, that's crazy.
Yeah, industry-wide.
Yeah, we just don't see it.
And I think, not as much in our market. We do. I mean, ours is probably split. You know, we're probably almost 50% VA, but then, 25-25 conventional and FHA. You know, if you've got somebody that's
still a really small part of the market that's just conventional, though.
Yeah,
so,
I know people, I know lenders in the
loans.
Industry that I'd say probably maybe 70% of their business is conventional.
Whoa.
Yeah, and the other 30, maybe 10% or less is VA, and then the rest is FHA or USDA. So, yeah.
Wow.
Yeah, so it just kind of depends,
man. Do you think
that
has to do with the clientele that lender may be shopping
could
for?
Be. It could be that. I also think that some people just kind of they just get into this flow that's what they do, and like here's what you got. This is what it is. You know what I mean? And so they don't really analyze like, okay, this might be a better fit for you, or and look at both. Especially if somebody's a veteran, it's 90% of the time VA is going to be better. And that might be an understatement, honestly. Really? I do get, there has been some situational times where maybe conventional for a veteran does make sense if they've got a large down payment. And then if they don't have any kind of disability rating through VA, they have to pay this thing called a funding fee. And that can get hefty. That can be as much as 3.3%, So, if you take that, if they're paying that and they get a conventional mortgage, for example, they won't pay that, right? They may have a higher interest rate, but let's say they paid 1 point, to buy their rate down, right? So maybe they can get that same rate they were getting on VA, but now they're paying a point. That point is out of pocket, right? But now they're not paying the 3.3% VA. So like there's these kind of weird situational things where maybe that could make sense if you've got a large down, especially if you've got a large down payment, 20-25%. We might, and you don't have a disability rating, we might look at both in those just to see.
Random question. So when you were talking earlier about clients that are all cash, and it may be more beneficial for them to, just do a conventional home loan, big down payment, and put their money in the system.
Right.
For veterans that have a big down payment, like 20-25%, does that formula sometimes still hold true a little bit more, where they can go zero down and then put that 25% down payment back in the system?
Absolutely.
Especially with the interest rate.
Absolutely. If they have a disability rating of 10% or more, 100%, because they're not paying that VA funding fee. So there is literally no additional. It definitely makes sense for them to do that. The only time I would tell a veteran to maybe put any kind of a down payment down would be ultimately if they're trying to get around that funding fee. Because if you don't have a disability rating and you put a let's say your funding fee is 3.3%, like you could put a 5% down payment, it might take that down to 1.5%. So it could save you 1.5% on a $500,000 deal. I could save you, $7,000-8,000. You know what I mean? So like in those situations, putting a down payment for a veteran might make sense. Well, but if you got a disability rating, what you're saying, absolutely, man. You can take that money, put it in an investment, and just finance the house 100%. Yeah.
Well, also life cycle of the property factors in there too. So I mean, if this is kind of the forever home or like a long-term living situation, then maybe do that, because your money's going to be in the system for a longer period of time. But if you're going to pick up, pack up, and move pretty quickly, then
you might need access to that cash when you sell it. Because that, if we're looking at average appreciation rates, like modestly at 5%, right? If you put a 20% down payment on your home and that was $100,000 on a $500,000 house, like that $100,000 is in equity in your house. It is basically earning 5% a year because of the appreciation as well. You know what I mean? Because the appreciation of the home. So there is that factor. So you at least, that is kind of when you put your money in a house, I will say it is a bit of it helps hedge against inflation. Whereas, but if you want your money to grow more, you want 10% versus 5% or what, a lower appreciation rate. Generally speaking, appreciation rates aren't going to exceed what like an S&P 500 index fund are going, you're not going to get the same returns. During COVID we did, obviously, but those are anomalies, man. I don't think we'll see anything like that for a long time.
Or just like market blooms, because our market had this weird double dose, because we had the COVID appreciation where everybody's house immediately doubled in value, but also where we live in Elizabethtown, we had a ton of growth just pop right around the same time. So like
new industry, new businesses on top of being by Fort Knox. So we've got, you've constantly got soldiers fluctuating, coming in and out, buying and selling. So and then you didn't have the inventory.
Oh my gosh.
Right. So you got low inventory, and then you got all these people moving to the area, and you got COVID, and you got low rates. So now you've got this insane amount of buyers demand with, you got 10 buyers to every one house available. What do you think that's going to do to prices?
And what's that going to do for the competitive advantage that you have for a VA home loan?
The way that we were helping to try to get around that sometimes is because I actually had a couple guys that were active duty military. They moved into the area.
Yeah.
They got them pre-approved for VA financing. They went out shopping. They lost a couple bids because they had a VA finance. They came back to me and said, Ryan, we're going to have to go conventional, man. We're going to have to put a down payment down. We're not going to get our... And what I told them is we can do that and we can get you proof of that. But I tell you what, when you're about to make an offer, let me know. Let me call the listing agent.
Yeah.
And maybe that will help, because believe it or not, man, you would not believe it. Like, a lot of real estate agents don't thoroughly understand the VA financing. Some people, not only outside of the more stringent, let's say slightly more stringent appraisal guidelines, like the house has to be in a little better condition than with a conventional. But there is, I've come to find that there are some real estate agents that think if you're doing VA financing, you may not have, credit or good savings. Like, you may have a low credit
it's
score.
It's a shakier deal.
Yeah, right. Yeah. Like, you're like an FHA, like got low credit score, no money.
In.
Yeah. And so there is this like misconception with that too. When, like, I'd say, I bet if I went and looked at most of my VA clients, man, most of them are 700, credit. They got money in the bank. They just want to do a VA because it's a better deal for them. So sometimes there were times where I run into those situations during COVID. I'd just say, hey, next time you want to make an offer, let me call the listing agent. Let me explain to them, like, hey, this is a VA. They're golden. Yeah. They got great, 700 plus credit scores. I'd have to get their permission to disclose that, obviously. But hey, 700 credit scores, they got money in the bank. Like, this person would literally be a knockout conventional deal, but they get a better interest rate. Yeah. It's gonna be $100 cheaper a month on their payment for them to take advantage. Why are we taking that benefit for somebody who's serving the country? You're taking that benefit away from them and forcing them into conventional loan. It actually kind of pissed me off, to be honest with you, because it was happening a lot, man. Yeah. Like during COVID, like it was very frustrating.
I had half a dozen houses that we missed out on for, a couple different sets of buyers just because it was, it's conventional versus VA. And I'm like, bro, what?
I know.
Like, I know. What are you talking about?
And then that same person that, that same agent that's like kicking out the VA is like, we support the military. We support our armed service men and women.
And the annoying part is that it was a clean house.
Yeah.
Like they're
they weren't going to have any kickback. No. Right. Yeah. If the house you're selling is a bit dilapidated, there's going to be a bunch of big issues come up. I get it. Like,
where you just don't have the means to do a couple little repairs.
Right.
But, I mean, if you're looking at an offer for 400 and then an offer for 405, the 405 offer is VA. Dude, put up the hand railing.
Absolutely. Yeah, handrail or some peeling paint.
Yeah.
Or that's the thing, man. People don't understand. It's very minor stuff. Or you got a broken window. You know what I mean, or whatever. Like it's stuff like that.
Or some loose, I think one got nicked. It had loose insulation in the crawl space.
Right. Yeah. And sometimes, man, I mean, when you start talking about stuff like that, I'm like, man, honestly, that should probably be fixed anyways. You know what I mean?
It was going to
come sell your house
out on the inspection anyway.
Yeah. It's like, you're going to sell your house, dude. These things probably should be done anyway. So
you want to hear about something wild that happened this week with an inspection the sellers were not happy about.
Okay. Was this your listing or you had the buyer?
It was buyers.
Okay.
So some buyers for our team put a house under contract and got the home inspection. And today we heard back. We hadn't even requested repairs yet.
Okay.
You know what the sellers were upset about?
What?
There was a cabinet door left open.
Oh my God.
And I think there was a ceiling fan left on. And there was a teapot that was moved off the oven because the home inspector tests the oven.
Right.
And I don't think the teapot was put back on the correct burner.
Oh my gosh.
If you want to just hear about random stuff.
Yeah. I'm sure, man. I'm sure you get some super anal people. Yeah. This thing was out of place.
Yeah. Thank God they weren't offering VA. They would have lost it.
Oh my gosh. Yeah. No kidding, man.
Yeah.
Yeah, I'm sure, man. I can't even imagine. You probably see this way more than I do, but I just even on the lending side, we see it. I feel like that a lot of sellers, and maybe maybe expectations aren't being set up front, right? I feel like a lot of sellers, man, are I don't know, like the sellers and buyers' perspectives are definitely not aligned right now. Like sellers just want to just throw whatever they can up against the wall. And I get it. Like if you're strapped for cash, like, hey, I got to sell this house. I have no money. I can't do anything. Like this just is what it is. Like, okay, let that be known. But if it's just like, I feel like sellers are just trying to, and if you bought your house pre-COVID and you're selling your house now, we already know you got an insane amount of couch equity, right? Like you didn't do anything to the house and made $100,000 extra just because the market, and now you're pushing back on some buyers who might want, some minor things fixed. And so I feel like we have seen, and I know we've talked about this before, an insane amount of deals fall out at home inspection this year and last year, and probably the year before, man, 23, 24, and this year. It's every month we got deals falling out at home inspection. You just never really used to see that. Normally people could come to some agreement, and I'm like, sellers have more equity than they've ever had. Now, if they just bought it 2 years ago, they don't have a lot of, but if you bought it pre-COVID and then you're fighting buyers from some minor things, like, dude, you got to get your house in order before, if you want to sell it, you know what I mean? Like,
well, and between the disconnect between buyers and sellers, I think this disparity comes from the same place. I really do. And it has nothing to do with expectations. I think it has everything to do with fear and the economic volatility that we've been seeing over the last couple of years. I think COVID was unprecedented, and it has a lot of people afraid. And there's a lot of folks that they just don't know what the future holds. And when I say folks, I mean buyers, sellers, and real estate agents. There's a lot of people that are afraid of missing out or maybe spending too much money. And I think it feeds into this, it's like this tight gripped attitude where the seller's like, no, I'm not doing anything. Or it's the buyer that's like, no, I want everything. And the middle ground is way harder to reach because people want things to come to them. They want it being done on their terms. They want it all to favor them, which is not a good way to do a deal.
No, but this is also why you as a real estate agent get paid the big bucks, right? You got to help them come. You got to help that try to come together, right?
Yeah, no, and it comes to prep. A lot of it comes to setting the expectations, understanding, and I think more recently we're seeing a lot of stuff fall out because we're still bleeding out a lot of the part-time real estate professionals. And it sounds kind of, I guess, maybe a little bit more coarse for me to say that, but there's a lot of folks that got their licenses during COVID that did not dedicate a whole lot of time to really perfecting their craft. And their craft is people. So being able to manage the personalities and,
psychology, communication,
big part, understanding what a win looks like for your people. How do you convey that? What creative means can we use to bring this to the finish line, not just because it gives us a paycheck, but because it gives our clients a paycheck. Because if our buyers purchase this property and we find a good middle ground and it's still a win for them, they're getting equity. They're still being able to build and safeguard their savings from inflation by owning a home. And then if you're representing the seller, like it's more beneficial for the seller to have that deal close early on because you're not holding on to this property that's expensive. And you're not having this listing that's sit on the market for a while because we're looking at inventory in our market, and inventory is sitting, but it's old inventory. New inventory is moving. And that's because old inventory is either priced incorrectly, it's not marketed the right way, or they got offers early on and they
didn't take them.
They just didn't want to move. And
then the longer it sits, the staler it gets.
And I think that a lot of people just have to come around to really what do they want? What does a win look like for them? Because I think this like fear of missing out or this fear of maybe making a bad decision, and a lot of that comes down to the real estate agent as well. Like
I see that with I can understand that from the buyer side, but from the seller side though, like if you got a house, like what fear is driving you if like, okay, I bought this house for $200, now I'm selling it for $400. You know what I mean? Like,
and then you get an offer for $385.
And
you're thinking
like,
in your head, well, that's $15,000.
But I just bought it for $200 5 years ago.
I'll hold out. Like, I want $400. We have sellers that are like that.
And that is crazy to me, man. That's crazy. Like that is just not logical at all. Like, So man, I'm sure you see that. I can't even imagine having to work with a seller though that has that mindset, because that would be difficult, man, to help. Like, granted, you got to push the big bucks.
You got to push them through their paces, and at the end of the day, it's the client's call. Like it's not your house, but you really have to. And it's for us, for our team, this doesn't happen as much because we spend so much time on the prep stage,
right?
Where we're really trying to pricing. Our pricing isn't just throwing a number at them. Like some folks will comp it appropriately and then just give them a number without breaking down where it's coming from. Instead of like giving them a full-on report and being like, okay, so these are
actual strategy.
Well, these are houses that are literally just like yours. It's you know, plus or minus $5,000 or $6,000. They're all very similar style, neighborhood, price point. This is what they're going for. Okay, this is what people are paying, and so being able to set the expectation for them moving forward, like we're going to do a little bit more than what you're used to so that we can get some more eyes.
Right.
But at the end of the day, the market's going to kind of tell you what you're worth. And like I was talking to an appraiser, our favorite appraiser, actually, Jesse.
Yeah. He's the man.
Oh, yeah. And he's like, honestly, man, I'm just here to safeguard if this deal is good for the real estate market.
Right.
And I was like, wow, that's a really good way to put it.
Yeah.
Because when I was talking to him about comping the properties, if we're seeing any major differences or any things that are coming to light recently that maybe hadn't been present before. And he's like, honestly, it's kind of the same.
Yeah.
I'm here to reflect sales and, you know, what the market is trending towards to make sure that this is a safe transaction in general.
Yeah.
I'm not here to nitpick.
Right.
And not all appraisers are like that. That's why he's our favorite.
Yeah.
But, really comping out a house.
Well, because there's no ego. Some of them start to put an ego into their opinion of value, you know, and condition.
And when I was asking him how, I was kind of breaking down how I comped out houses, and he's like, honestly, man, as you start adjusting, the price will become more apparent. Like you're going to see where it's trending. Like the house will kind of lead you to where it's going to settle. And, you know, you can't really try and bucket too much because if you lasso somebody in here to pay an exorbitant amount of money for this house, it's going to get knocked down in appraisal anyway, just because you can't justify it with the market. And a volatile sale like that isn't good for the market. So if there's going to be an appraiser involved, they're not really going to want that because it's not healthy.
Yeah.
You know, we don't.
And you know that happens too. Yeah. You get an agent that says, oh, I think we can get this amount for your house.
And sometimes they can. Sometimes they're really good at marketing.
Yeah.
Yeah.
And they may get that offer, like you said. They get an offer, it goes under contract, but 100%. Then guess what happens? A week later, get an appraisal back.
Yeah, and it comes in under.
Yeah.
And everyone's shocked.
Exactly. There's no preparation for that. Like, hey, we probably got a little more than what the market, you know, instead of telling your client, hey, we probably got a little more than what the market bears.
Yeah.
Let's not be super surprised if the appraisal, you know, doesn't come back. I don't, you know, I mean, obviously you'd put that in a better way, but I think if you prepare your seller for that versus the call with, hey, we got the appraisal back, we got to cut it 40,000. You know what I mean? Like, because now once the seller, you know, man, like as a seller, once you get that signed contract, you're like, yes, this is the money I'm getting now.
Yeah.
Like you're counting already.
Well, and the listing agent starts counting their commission.
Right.
Yeah.
And then when they got to call them and tell them the appraisal comes back, everybody's up in arms. You know? Now, if you're a good real estate agent and you think you can justify that, like you can provide comps, you can dispute, you know.
I meet the appraiser out there.
Yeah.
You know, they get a copy of my comps.
I've seen disputes. Actually, you can dispute a value when it comes back, but the success rate is so low, man.
Yeah.
We help, you know, mediate that process on the lender side, but the success rate, it's probably 10%. You know?
It's not good.
Yeah.
Yeah. Even if the appraiser doesn't really, I've seen some bad comps from an appraiser.
Yeah. Oh yeah. Happens all the time.
Yeah. But I mean, at the end of the day, like it is going to be their word.
Yeah.
That's why being an appraiser is really hard. Like getting your hours.
People forget too that what that says on there, it says the opinion of value.
Yeah.
Like that word is kind of key, right? Like opinion of value.
Yeah.
So there can be that might be another argument for another day, but like there can be some, I guess, argument made that maybe sometimes appraisers have wield a little more power in this industry, but
they do. But I mean,
it's there for what you just said.
To stop somewhere.
Yeah,
you know, you're borrowing hundreds of thousands of dollars with government-backed dollars. You know,
and when you have good appraisers like Jesse, who we know do their due diligence, they know their stuff.
Yeah,
they're doing. You know, they want to make the deal work, but they also are there to make sure that transaction is, like you said, it's good for the market. Yeah, absolutely, man.
Exactly.
So,
100%.
But I think that, there's probably, there's real estate agents and, people involved in the transaction on that side they probably don't look at it that way. Hey, we got somebody to pay a number. Yeah.
Yeah.
We got this person to agree to pay this.
Yeah.
Let's make it happen. Like, dude, it don't work like that. You got to have data to back up these numbers. You know?
Exactly.
Now, if you got a cash buyer, different story, right? Like, you don't need an appraisal. You don't. Yeah. And we've had several. If you're doing a conventional deal, and you are putting 20% down or more,
we had one in Bowling Green.
No appraisal waiver. Mm-hmm. Yeah. All day long, man.
Because it's a safe enough transaction.
Yeah, because that system, Fannie Mae and Freddie Mac have, an automated valuation and AVM built in, this algorithm that's picking up the sales and the comps, and it says, hey, this number falls within what we said. So
it's just high stakes gambling at the end of the day.
What's that?
It's just high stakes gambling at the end of the day. We have a very high rate of success with this number.
Yeah, absolutely. Well, and man, a lot of the appraisal industry is going to be more and more driven by artificial intelligence and data. It's going that way already, man.
We got to talk about that later.
Yeah, it's going that way.
Real quick, I'm fighting a sneeze because it's spring season.
Yeah.
I'm going to go sneeze. I'll be right back.
Okay. Sneeze button. We need a sneeze button. Yeah. Appraisers. Yeah. Yeah. Mm-hmm. We need, as a matter of fact, we probably should get Jesse on here one time just to kind of chop it up a little bit about, how that works. Because there's a lot of it's almost sometimes like it's like this mystery man that has all this power in the industry, Yeah. And man, there are some appraisers that in our market, there are real estate agents who dislike them with a passion. Like they're almost like they're their enemy. Like they're just, and maybe they are not doing things the right way, but there is some intense dislike for some appraisers out there.
Yeah, and
I hear it.
It's like intense as like anywhere. So I mean, we have our favorites. Like obviously Jesse's just a great dude.
Yeah.
But just as much as we like Jesse, we may not like a certain other person.
Sure.
And just not necessarily because they...
Yeah, I don't think it's personality related. But
I think some of it's personality related.
Really?
Yeah. I mean, it's like working with any other professional. There are people that suck and there are people that are awesome.
Yeah.
That are on time, that are communicative, and I think that...
But that could just be... That's just professionalism, though. Yeah, that's what I'm saying. You may not be a cool dude, but you're really good at your job. You can be an appraiser and you can be on the spectrum a little bit, you know what I mean, and still crush it, you know what I mean, do a good job.
Yeah, the point I was trying to make is that I think that there are appraisers that aren't very professional, but they have all this power. Right. And it makes a lot of agents not dislike them. Yeah. And then by nature, they get a few bad appraisers in a row. Right. And they all of a sudden just hate appraisers.
Right.
Now, the other side of the fence, I think, is a lack of professionalism amongst agents, where you'll see agents buck at certain things at any juncture of accountability or any type of this. Okay, show your work.
Right.
Okay, where did you get this number from?
Right. That we see.
Where did this come from? When did you prep your people?
Right.
How many times have you checked this? How deep did you actually work on this problem set?
Right.
In order to, kind of guarantee success.
Yeah.
And so I think that's where the other half of appraiser hate comes from, is because there are agents that may be a little bit less professional than they need to be.
Right.
And it's just
they can't show their work.
Yeah. It's the homework, man.
Yeah.
So.
Okay. You got to that number. Mm-hmm. We got your appraisal. Came in lower than what you thought.
Yeah.
Show me your comps.
Yeah.
Your comparable sales. Yeah.
Oh, why should I show you comps? I got someone to pay for it.
Yeah.
Versus, I did the work. Here, check this out. So I adjusted here, square footage, condition, location, view, all of the stuff. It's way easier to justify that. And if you're proactive, if you're an agent that's on the professional side of the spectrum, you've already sent the appraiser your comps.
Right.
The minute that appraiser, because if you're working with the lender, if you're a listing agent, you're reaching out and you're like, hey, did appraisal get ordered?
Yeah.
Cool. So it got ordered. How long does it take for it to get picked up? Not long. Okay, so it got picked up. It's this person. They'll be reaching out shortly. Well, the appraiser has to reach out to the listing agent to get access to the property for the appraisal anyway.
Yeah.
So why aren't you taking the initiative here and reaching out and going like, okay, hey man, how's it going? It's me. This is the house. I pulled some comps on it. You want to check my notes real quick, give me some feedback, but this is where we kind of got this number from.
Right.
That sets a much more just smooth tone for the rest of the interaction than just being like, yeah, here's the access details. Like, go ahead, man.
Yeah.
And so I just think that it could be mitigated by being a little bit more proactive.
Yeah, absolutely. I think that's, half this job, man. I feel like a lot of people aren't that in my industry, in your industry, all around in this industry, realtors, lenders.
Which doesn't make sense because our transactions are worth so much money.
I know.
I mean, even a median home price being what, like $335, $340, that's a $10,000 paycheck.
Let's just even say 300.
Say 300, that's $9,000.
Yeah.
That's stupid. How are you not on your toes every step of the way, making sure everything's done, everyone's called, everyone's on the same page? It's nuts.
I know.
And I mean, even if it's not a $9,000 paycheck, even if
so what is that?
What do you mean?
Why is that? Why is that? You know what I mean? Why do we have to be shocked?
Because historically they've never had to, especially in our market.
Yeah.
Because I think COVID times, right?
Yeah.
A ton of people just got real estate licenses and they're walking
tripping
into
over deals and
deals constantly.
I
don't have to do that. Oh, that's fine. Whatever. This one falls through. I got like 6 more.
Yeah.
And it was far less work to generate the business. But now that we're getting into the
But pre-COVID, it was normal market, you know, and then we're kind of back to pre-COVID market. You know what I mean? Honestly.
A little bit.
Yeah. This is kind of a market, this is very similar. This is what I would probably consider almost a normal market. Yeah. Honestly. You know?
A little bit. But we still have some
still a little low. But
we still have the residual though of people that are still trying to hang on by doing the bare minimum.
Right.
Yeah. They saw Selling Sunset and they're like,
yeah.
I want to make some money.
Yeah, those reality shows do no justice. But people love them, man. They get lots of views, those reality shows. I told you real estate's sexy, man.
Yeah, like, it's a lifestyle.
Yeah.
I think that a lot of people like the lifestyle where it's very glamorous. It's very like low work, seemingly. It's
or it appears to be low
it's
work.
Like low people.
Because we already know it's
show up. People kind of do the stuff for you. All you have to do is open a door.
Right. I'm a glorified tour guide or whatever, but we know that that's not the real.
No. I mean, that could be someone's reality.
I guess so. Yeah.
Depending on where you're at and depending on your market, or
if you're not
Yeah. I mean, that could be your reality. But
I suppose,
Yeah. But I mean, if you're trying to grow and you're really trying to be the best at what you're doing
and even not grow, let's just say I'm not trying to grow. Let's just say you're trying to maintain your business. But just as a like just what I would call craftsmanship, right? Yeah. Like you can have craftsmanship in a service related industry. You know, you want to be good at your craft, what you're doing, man. You want to take care of the people. Even let's just say you're not even trying to expand your business or grow larger. But you should, in that case, you should want to just be good at what you do, you know? And so that always blows my mind, man, that people take so or think so low, they're just not I don't even know what the word I'm trying to think, but they don't care. I mean, you know what I mean? Like
it's mind-boggling. It's apathy.
Yeah.
It's a very apathetic mindset.
Yeah.
Where you're just kind of like, whatever.
And do you think that is the barrier to entry too low in your industry, in the real estate side? It used to be in mine.
To get a license, the barrier is really low.
Yeah.
I think the barrier to get business now is far higher.
Right. Yeah. Actually getting clients.
If we're talking 2019, end of 2019, 2020, barrier to entry in general was like the floor. You have, especially for Kentucky, what do you have, like, like 60, 80 hours, something like that?
Is that what it is?
I can't remember.
Yeah. I don't know on the real estate side.
It's not that many hours. It's I mean, you can do it
to get your license.
If you have nothing better to do and you just crush your online hours, you can go get it online. You go test out. You have a 30 question state exam, or at least for Kentucky, and you have I think it's like a 60 or an 80 question federal exam.
Okay.
Don't quote me on that. I can't remember.
Yeah.
But that's it. Once you test out, you pay your MLS fees. There are some MLS fees that are $300 a year, and lo and behold, you're a realtor. Yeah, you can open a door, you can get on a lockbox.
Yeah, but I mean, I guess it's still something. You still got to do the hours. You got to take tests. So
yeah, there's a little barrier of entry, but for the amount of dollars that we have thrown around, like for instance, a lawyer, right?
Right.
You got your undergrad, and then you have your law school, and then you got to go past the bar.
Yeah.
That's multiple barriers of entry.
Yeah.
And then that's just to become an attorney. I mean, if you're going to go private practice and know nothing, like you're literally not going to have any clients at all, unless you just have a windfall.
Right.
But you're still not going to know what to do. Most of them go intern or clerk, and then they'll start working as an associate for a firm.
Learning the ropes.
Yeah.
Basically.
But they get babysat. Like, I'm just trying to think of all the lawyers that I know that before they were able to run a case solo, like they were just doing associate work, like drafting orders and petitions. Yeah. Before they ever got turned loose on their own.
Yeah.
So
are you saying that there should be there needs to be more of that?
Yeah.
Yeah.
I think
but
that
on the real estate side.
Yeah. I
that
think
too many people get licensed. And so is it there? Still, you need some accountability. So if you're not with the right company and you're not getting the help that you should get or the mentorship that you should get, you still have to go seek that out yourself. You still have to somehow, right?
I think one or two things needs to happen, because you're, as a real estate agent, right, you have to work under a broker.
Right.
And working under a broker is supposed to mean that the broker is looking at all of your stuff. He's on the hook for all your deals. He's making sure that you're saying the right things. Especially in our market, or even think bigger markets with big box brokerages that have hundreds of agents but one broker.
Yeah.
Really? Yeah. No, absolutely not. This dude is not going to be able to, babysit all the new agents that come in. They're going to do their interviews, and they're going to be another body.
Yeah.
And which is what they are, which is why we have such a low barrier of entry and a low skill set for so many agents. So I think.
And do you think that's because brokers may be incentivized just to fill the room or fill the offices, and they realize there's going to be fallout, whatever's left, that doesn't matter. They get a little bit of something of all of that, well,
because you're bringing in an agent that's 1099. They're an independent contractor that carries their own E&O insurance, same way you do. So they're incentivized to mass recruit and bring in tons of agents that some of them will cash, some of them won't.
Right.
But you need to keep that pipeline of agents full.
Yeah.
So because some of them are going to work out. There's going to be some self-starters that get after it, and those are going to be the ones that pay you. But when it comes to the mentorship and accountability for the people that are carrying your brand and in your office, there's not much. Now, there are some great brokers out there that do a really good job. But by and large, the connection between brokers and agents is not very strong. Yeah. Especially in our market, a lot of brokers compete against their agents for work. Yeah. Where the broker acts as a realtor too, which they should. If you're a broker,
should be practicing.
You're going to be practicing, you're going to be getting out there, but they look at their other agents like competition as well. Yeah. So all of those little tips and tricks and little ways to work deals and stuff, they're not sharing the secret sauce.
Because it looks like a trade. It's like they're sharing a trade secret with their competition or something.
Because that agent could just as easily go bounce to another brokerage and take that playbook with them. Yeah. So I think there needs to be some sort of overhaul into broker-agent relationships, how agents are interacting with their firms, and how the ease of transition, or there needs to be a higher barrier of entry for agents in general. So if you want to keep the status quo for broker agent relationships, they have their, long leash of accountability. They've just got to make sure the forms are filled out right. Some people don't even do that, but what it is, keep it like that. Fine. Yeah. But make the barrier for entry higher. Maybe do some apprenticeship hours. The barrier for entry to be an appraiser is stupid high. So many more hours.
There is. That's why you don't have very many people entering that field.
Yeah. Well, that's why appraisers have so much power, in my opinion, is because it's so damn hard to be an appraiser. Yeah. They're under a lot of scrutiny. And so I think that if you're going to force a higher bar for agent skill sets, you need to have either a higher barrier of entry for sales associate licenses, or there needs to be an increased amount of visibility for broker agent interaction. Yeah. If you have a broker for a brokerage, you either need to have a very robust, structured training plan and curriculum and process that's going to be adhered to, and very staunch accountability measures, or you you just need to make sure agents are getting more and more education. And I think there needs to be an overhaul in the curriculum, because even if we look at continuing education for agents that are doing are like their CE shop or your annual stuff to keep current for your post-license education, because you're supposed to do hours of education.
Right.
Half that information is not right either.
Really?
Yeah.
Oh my gosh.
You know, the funny part is, you know who writes a lot of those classes?
Who?
Realtors. It's annoying because, I mean, I was doing my PLE last year.
Which I guess in a way you should probably be practicing real estate if you're writing.
But most of the people that carry the licenses that write on this stuff, their moneymaker is not selling houses. Their moneymaker is teaching courses or writing curriculum.
Yeah.
Like they carry a license in name only.
Right.
So they're not out
actively out there.
No.
Yeah.
Not to the level that the people that are taking these courses are. And we saw the big, you know, like how not current or not like adaptable real estate curriculum is when the agent compensation rules changed last August.
Yeah.
Where the Department of Justice ruled against, or they didn't rule against, it was settled.
Yeah.
So, but basically NAR, the National Association of Realtors, passed the rule that says like every real estate agent that is a member of NAR has to have a signed buyer's agent compensation agreement prior to showing. Right. It's a requirement. You can get fined. And
if they're not getting that prior to showing. And that's not happening, right? Always. Do you think that's happening always?
It's not. I had a talk with Steve earlier today. He had some people call in through Zillow, and he's like, all right, cool, let's set it up. I got some paperwork you got to go through initially. It's just, they're state forms, they're required, but we got to do it. And he explained to them what they were, and the buyers are like, no, we're not doing that. Yeah. He's like, well, I can't show you the house without those forms being done. And they're like, that's weird. We had a RE/MAX agent go and show us a house 2 days ago. He didn't make us sign anything. And it's like, whoa, well, we're not going to go dime him out. But at the same time, like, dude, that's not cool, because you're trying to get a cheap showing and lasso in some buyers real quick because you're hurting. Right. But all the rest of us out here that are trying to do things the right way, like, that's very much so a big no-no, because we're
now that makes it look like y'all are just being overkill, basically, or trying to.
And the same thing now with all of our emails that go out for our welcome letters and our initial buyer showing consult stuff. Like, we have the resource pinned that says, you know, that's from the government website. It's like, and also the MLS, and also basically when you go to schedule a showing through Showing Time, it says you have to have a buyer's agent agreement signed. Right. This is a rule. And
so there's obviously people out there not doing it, though.
No.
And so what happens if they violate that? Like, if
they get fined, if they get found out, they get fined.
Really? Okay.
It's first.
I'm sure that's got to be happening a lot, right?
I haven't really been paying attention to it.
Yeah.
But I would. It's not like they post their mugshot on the MLS
I just don't know
website.
if you're hearing back from, like, that's the only way you're really probably going to find out, right? Like, you're going to have buyers give you feedback. Like, wait a minute, you're making me sign this. Nobody else. We looked at some other houses. Nobody made me sign this.
Yeah.
You know.
No, exactly.
Yeah. So should a buyer let me ask you this: if a buyer says, "I'm not signing that," what do you tell them?
I can't show you the house.
Yeah.
That's it. It's a pretty simple.
Because I've talked to some buyers who thought that I had to explain, and I'm a lender. I'm not, a real estate agent, that thought that, they had talked to buyers. They thought the real estate agent, they used the word sleazy. Like, they said they're being sleazy about it. Like, they're trying to make me sign this agreement. I'm not signing an agreement. I just want to go look at the house. And I'm like,
well, before we show houses, you either need a proof of funds letter or a pre-approval letter. Right. And we need a signed buyer's agent agreement. It's not just one thing. We have to go through a whole consult
there's
process.
Markets before this law went through. I know there's markets in the United States, not in our market, not really, probably, maybe not even in Kentucky, but there's other markets that I know that were doing those things before. Like, most agents,
the bigger the market, the more regulation there is. Yeah. Because they've already run into these issues before. Yeah. Where it's a lot of he said, she said. Yeah. Oh, we thought we were going to do this because by nature, the buyer is supposed to pay their own agent compensation.
Right.
So that makes it so that the buyer's agent...
It's always technically been negotiable, right? And that was part of this suit.
Well, the amount has been negotiable.
Fixed
where the money comes from,
right.
It has to come from the buyer. The buyer has to pay their own agent their compensation. That's always been the thing.
Right.
What has been happening is that sellers offer that compensation as a percentage to the buyer,
right,
as an incentive to sell the house.
It's a marketing fee in a sense.
Essentially, it's basically a credit that's auto-applied to the buyer.
Yeah.
So, for instance, if it's a $300,000 house, the seller is offering 3% buyer's agent compensation. That is a credit that first goes to the buyer side of the settlement statement. And then it gets paid out from the buyer side to the buyer's brokerage and another line item, which means that it is a credit from the seller to the buyer, from the buyer to the buyer's agent.
Right.
That makes sure that the buyer's agent's getting paid. So if I'm a buyer's agent, you're a buyer, you're paying me, I work for you.
Yeah.
And same thing with a home inspection. The home inspector gets paid by the buyer. That means the home inspector works for the buyer.
Yeah.
And so that has to be very...
I've never seen one buyer ever pay the buyer's agent fee ever.
Yeah, you have.
Like not without a credit from the seller.
Oh yeah. I mean, you've seen
I've never seen the seller not give a credit to the buyer's agent to pay, or to the buyer to pay the buyer's agent fee.
Oh yeah.
Never seen that.
I mean,
ever.
you've seen buyers cover like a difference, right?
Yeah.
So yeah.
But I'm talking about like the full, like let's say the seller says, I'm just paying my listing agent 3%, and I'm not paying the buyers. I'm not giving a credit to the buyer to pay their buyer's agent.
We had one that almost ended like that in February.
You had one like that?
Yeah. It was
really?
it was a referral that you gave me.
Which one was that?
The one with the basement.
Oh, that happened. The seller.
Okay, so this is like, we're not going to dime anybody out. So so Ryan had some folks call in, VA folks, and he'd been working with them for a while.
Careful.
Yeah, and so you worked with them. You knew that I was going to do good work. So you gave me a call and you're like, hey, dude, I got these people pre-approved. They're looking for X, Y, and Z.
Right.
Rock and roll.
Yeah.
And so I made contact and we start working. We got all the paperwork done ahead of time, of course, but we settled on a house, and it was a house that they liked and it fit all their parameters. It was a good buy. And so we go to, I made contact with the listing agent. We had our chat. We wrote an offer, and in our contract, I wrote in 3% buyer's agent compensation paid on behalf of the buyer to Real Broker Inc., which is our parent brokerage. Okay. Which is how almost every single one of these things is written out. Well, we get a counter back with no call from the listing agent, nothing, that says price is going to be this. Seller's not offering any buyer's agent compensation.
Really? I never even noticed that. Or
yeah. So we had to go back and forth. What happened was the seller had bought the property 8 months prior, and immediately turned around the very next day and tried to move it because there was some personal thing, and they just had to get out from under the house. That whatever life plan was put in place is no longer going to happen. So we just got to get out. I got to get out of this. So they went and listed it. And again, this is just goes to show you the difference in agency. Like, there was not a lot of really extra level of marketing work done by that listing agent. They just threw up the old pictures and tried
the old pictures from the previous sale.
Yeah, because
were they the agent on that?
No. And then there you go. And so it sat for a while, understandably, because they were not the best pictures, and they didn't really do any of the extra marketing stuff that we do. So traffic was low, but it fit the bill for my people. So like 8 months later, my people want to purchase it. It fits their budget. It was a niche property. So anyway, I get on the horn with the listing agent, and she's like, yeah, like he's not going to make any money off this. He just is trying to sell it for what he bought it for. I'm like, well, that's not the way of the world, sister. Like, it ain't happening like that. Yeah. And she's like, well, I'm only making X amount of dollars on this. Would you match that and like and reduce your commission to that? And I'm like, no. And it sounds selfish, but the thing is like, I've fluxed my commission on deals to make it work before. And you know, I'll do it again, but but that's my choice. Yeah. We make what we make because we do what we do.
Right.
Like
you do the work.
Yeah.
Yeah. Could you imagine you go to work for, an employer, right? Mm-hmm. They pay you hourly. You go to work for 2 weeks and that employer says, you know what, man, my bank account's kind of low this week. I'm only going to be able to pay you half of what I normally pay you. Okay?
Or less than half.
Yeah. Or less than, you know what I mean? Like, could you imagine, dude? Yeah. Like, I don't think people put it in that perspective sometimes.
No, it's tough. And I wasn't going to let it tank the deal. So we, I'm like, okay, so he bought it for this
because you're trying to take care of your clients. Yeah. You know, they want the house. Mm-hmm. How can I get them this house? Yeah. So
we ended up working back and forth on the seller was basically just going to have to bring some extra money for closing. I made sure that my clients got the numbers that they wanted first.
Right.
The purchase price, closing cost credits, home warranty, all that jazz. And so that was taken care of. Right. And then at the bottom of that, I was like, all right, I got to make my money. Right. Because if I don't make money, then the doors close and I can't help any more people.
Right.
You know what I mean?
Exactly.
And so we got that worked out, but it was a tough sell because she had cut her commission so low and the seller was just thinking like, oh, just do it. You know what I mean?
Yeah.
We had another one not far after that where the seller was offering like only 2/3 of what, we charge normally. Yeah. And I'm like, okay, well, you can still pay me this commission if you want to sell the house.
Right.
Because the house has been on the market for a year and we have the buyer. And the listing agent's like, well, no, it's not really all that fair. And I'm like, what are we doing here? This commission talk can get real weird real quick. Especially like I've had weirder commission talks with other agents than I have had with buyers or sellers. Because when we sit in our console, like we outline
out.
Well, we outline all the stuff that we do.
Right.
And we have our past performance and our book of business that can talk to how good we are or like the efforts that we put in. So, for folks that up front, they know what it costs, they know what we charge. It is what it is. That's just what we've built our business on. And they're okay with it because we're transparent about it ahead of time. The tougher conversations are with other agents that have maybe taken a haircut or, feel a different way about it. And they're starting to look at what you're making. And it's like, all right, I get it's a natural reaction, but
like, you're a business person.
Yeah.
You should know better.
Yeah. Keep your eyes in your lane.
Exactly.
Man. This is
wow.
Yeah.
Yeah. Well, I guess I've never seen a buyer actually have to pay all of their like that 3%. I've never seen them having to pay that full 3% to the buyer directly out of their money with no money from the seller whatsoever. That full 3 or 2.5.
I had a deal
whatever.
last summer where the buyer paid the buyer's agent and the listing agent commission.
The buyer paid. The seller was paying nothing to the listing agent? And that's because the deal got cut? That's not how it started, though, right?
That's exactly how it started.
So the listing agent said, I'm going to list your house for 0 commission.
No. So I was the listing agent. Okay. Right? So I was the listing agent. It was a hot house, and we had a cash buyer come in. And the buyer was like, yep, here's our proof of funds. We're all cash, good to go. We want to pay this many dollars. So we want to pay asking price, but we want to pay asking price minus the basically realtor fees.
Okay.
Which is, I think at the time it was set at 6%.
Okay.
So it was $300-something dollars.
This is what the cash buyer said.
Yeah.
We'll pay the asking price minus the commission. We want to cut the realtors out
so
entirely.
I think it was like a $300,000 house. Okay. I think it was like the buyer will pay asking price, but take 6% off the asking price and the buyer was going to pay the realtor commission as a closing cost line item. So 18 grand was going split between the two agents, paid by the buyer, in addition to
in cash.
Yeah.
Okay, that out of the price of the home.
So 300 grand minus 18 grand, which sits somewhere at what, 380 or 282.
Right.
Okay. And so they're still paying 300 grand, but they're paying only 282 on purchase price,
paying
and
that
18
out of
grand
pocket.
in a closing cost. Because they're paying it both out of pocket because it's a cash deal. It's the only reason that would work.
Yeah, right. Not financing it. Yeah.
You want to know the actual, it was smart of them to do that.
Yeah.
But the incentive for it, tax implication.
Yeah.
Because their property taxes are assessed off of the recent sale.
Yeah.
So their property taxes are assessed under $300,000 now. Their value or purchase price of the property was $282, not $300.
What are they gonna save? $10?
Yeah, probably.
Yeah,
over the next. I mean, they're probably
ridiculous.
They're probably gonna die in that house.
Yeah,
but
I know, but that's like
next,
somebody that to me is petty. That's a petty way to structure it. There's no I don't know.
It took an extra 3 forms for us to do, and we had to explain it to title on how to work it. Easy.
Yeah.
But we got full asking price, no appraisal, and they waived the inspection.
Yeah.
So I mean, it was done in a couple weeks.
Right.
A little legwork for us, but
couple weeks.
Yeah.
Cash deal, man. We financing deals in a couple weeks.
It was a title company. It was a slow title company. Yeah, that was
those
fun
are
one.
out there.
Yeah. So, but yeah,
title companies matter too. Yeah, that's something we don't really talk about much here.
But we're gonna have to talk about that later.
Yeah, we'll have to get into that on another one.
Yeah.
So, if you are a buyer right now, do you think? Well, let me ask you this, man. When you're talking to buyers right now, are they concerned about this NAR thing and having to pay this commission? Like, do they even know about any of this?
A small amount. It's like 25% of buyers and sellers know that there was even a lawsuit. Like, it was all over Facebook last summer.
Or even, so when it happened, when it was out there, I was getting asked by multiple people that are outside, like just friends, family, like at
do you still get asked?
Absolutely not.
Yeah.
That week, the week that it was in the news, I got asked about it.
Because it was in the news. Everybody forgot that it existed.
Exactly.
Yeah.
After that, dude, I never got asked again.
No.
Not once. And I've never been asked one time. And so I was just kind of curious though, did that stick? Was there any stickiness to that information? And do buyers come and say, hey, because I think some of the concern initially was buyers were, the biggest concern, or the concern that I heard in the industry is that buyers were thinking, oh no, I can't buy a house now because I can't afford the down payment, the closing costs, and my realtor commissions.
I've actually not heard a single concern from a buyer.
Yeah, me either. But the only
people I hear it from are the sellers.
Yeah.
And it's few and far between. And it's usually like, so I read something somewhere that says I don't have to pay a buyer.
Yeah.
And I'm like, you never had to, man.
Yeah. You just get, and that gives you an opportunity to shine, to communicate.
Where it was like, so it was all the Matrix? And he's like, it never was.
Yeah.
Like.
Yeah. Well, that at least gives you an opportunity to be able to explain to people, hey, man, here's the real. You know what I mean? Like,
this is how it works.
Yeah.
This is how it's always worked.
This is how it's always worked.
We have an extra form now.
So they went through all of that litigation, and I'm like, guess who got paid?
The lawyers.
The lawyers.
You want to know what their commission percentage was on that class action?
30%.
A shit ton.
Probably 30%. And that's standard.
Weird. Yeah. So you're saying there's a standard rate for commission?
Oh
my goodness.
Yeah.
Can we take the class of people that made $10 out of that class action lawsuit and then file another class on the freaking attorneys that were like charging their standard rate?
Funny how that works.
They made a couple $100 million.
The first person who got that was or somebody who was part of that was an attorney. Like they were maybe an ambulance chasing attorney, and they had a transaction and they saw an opportunity.
Yeah.
Like, do you see what I'm saying? Like, they actually sold a house and they saw that opportunity. It's like, ooh, this is an opportunity. You know what I mean?
Well, I just think they watched a realtor step in it.
Yeah.
And explain something the wrong way, fill out a form the wrong way.
Right.
And they're like,
wait a minute.
If they're doing that to me, there's no way that they didn't do it to somebody else.
Right. And so I think that some of it was probably bad, due to bad business practices on realtor side
It
too.
definitely
right?
was. It was 100% due to bad business practices. The concept,
just not explaining things thoroughly how it works.
The concept of seller offered buyer agent compensation is not a bad concept. It was 100% brought about by low skill set agents who act like used car salesmen, and there's bad business practices.
And just didn't explain it.
Yeah.
100%. That's why when I tell people that, like, hey, people, after the news came out, what people thought, like the average person thought that the class action was because sellers were showing up to closing and got fees that popped up, new fees popped up on them that they were never explained. And when I told people, hey, no, they were told they're paying 6%.
Yeah.
And when they got to closing, they still paid 6%. It was just 3 of that 6 went to the other agent.
Yeah.
They still paid the same amount. There were no new fees added at closing. And they're like, really? And they're like, so what's the problem? I'm like, precisely.
Yeah. Yeah.
So, but yeah, well, that's good to know. We won't really address that anymore. I think that's a dead horse, man. We won't beat that anymore. I just want
we'll rant about it every like 5 or 6 episodes just because it's like, you want to know something stupid.
I know. Well, and I wonder if we needed to address it for people, watching or listening to this, like, is that if that's a concern on their mind, because that was the industry, especially from the real estate side. I was hearing it a lot, like, buyers are going to hear this news. They're going to freak out and it's going to push buyers away, right? Like, so if you're a buyer out there, you're seeing this news, you're like, oh man, I need a down payment and maybe closing costs. And now I got to pay the buyer's commission. I can't afford a home now.
Yeah.
And don't look into it. And so now they just say, I'm out of the market now. I can't afford this. I don't think that happened though.
No, what did happen though was there's a major deterrent. Now we have to sign the buyer's agency agreements before
which
we
has
get
caused
into the
these
house.
Weird conversations because other people aren't doing it. You're doing it.
Yeah. There's a lot of fracturing with the practice.
Yeah.
And it's buyers had historically not had to do that. So now you start.
Yeah.
And another big problem is due to the Zillow business model and how a lot of people find their homes now through Zillow, and how Zillow connects people to agents.
Click, show up
to meet a stranger at a random house. Like now it's like, hey, stranger, sign this. It's like, whoa, like we were cool.
Want me to commit
we're not
to
that
you?
cool.
Yeah.
Yeah.
You want me to sign this agreement? Yeah. It says I'm going to have to do business with you.
We can get into that part too.
Yeah.
Yeah.
Yeah. I think that would be good, because I think that, if you're getting blowback from clients, then I think that's good to address.
Yeah.
Because that means that's happening a lot. There's people out there, there's real estate agents out there that aren't giving them that disclosure.
Yeah.
They're just showing them the house and like, hey, we'll give you this one for free, but next one you got to sign something, but that's illegal, right? Or not illegal. I guess that's probably the wrong word, but that's is it because it's not really a law technically, correct? It's just a rule.
No, I think DOJ ruled something about it. I can't remember.
Yeah, I don't know if it's actually a law or just a rule.
Yeah, I can't.
You know what I mean? So I'd be curious. But so how do you create this uniformity? I don't. We won't bore people with that. But I guess I just wanted to know, like, if that was something that the general consumer is thinking about, like maybe we need to address that concern, because I think if people are going to be listening to this, watching, like, they're also trying to figure stuff out about the market, and they're listening to two insiders, industry insiders talk about the business to try to maybe learn something new, or, try to help them along their way and their journey and trying to figure things out. So
exactly.
I think ultimately that's kind of what this is about. So as a seller, like, do you or from a seller perspective, you said they're pushing back a little bit on that now, though, a little bit more than what buyers are.
No,
not pushing back, but
I think
they're bringing it up.
If I am going to hear it, I'm going to hear it from the seller first.
Getting it from the seller. Yeah. Okay.
Yeah. And it's usually just like hey, I read something somewhere.
Yeah. So what does Zillow, if they're clicking a button on there to look at a house and it's a Zillow, and Zillow's in, so for people that don't know this, when you go to Zillow's website, you look at a house, you click that button, Zillow wants you.
That's for next.
They want
two.
you, huh?
That's for part 2.
Oh, is it?
Yeah.
Okay.
Yeah, we're doing that part 2.
So we'll tap on that, right?
We'll get into Zillow next one.
They're clicking that button, and then once you click that button, Zillow's then selling your information to the highest bidder, basically, at the end of the day. So your data is being sold by Zillow. So they want you to click a button and show, because that's how they make money. But do the Zillow not have any kind of, like, so is that completely on the real estate agent to provide that buyer agreement now at that point, or does Zillow help facilitate that?
I think they have showing or touring agreements.
Okay.
But I haven't seen any.
Those don't. Oh, really?
I haven't looked.
Yeah. I didn't know if like Zillow is like, once you click that and like, hey, your showing set up, but you got to e-sign this document, you know, 1 day agreement or something.
No.
Or can you do a 1 day agreement?
Yeah.
Yeah.
Like we do 1 day agreements all the time.
Yeah.
Mm-hmm.
But it still have to have something.
But it's not
signed.
Zillow made. It's MLS made.
Right.
I can break that down in the next one.
Yeah.
So
cool.
Yeah, man.
Yeah. So as a buyer, yeah, so like I think as a buyer right now in this market, man, like they're hearing all this stuff and they're freaking out.
Yeah.
Like they're like, dude, this is a lot, man. Like, I don't know. Like, should I buy a house? Especially if you've never owned. Hell, even if you have owned a home.
Yeah.
You know, you're probably you're hearing all this stuff about this, and then you hear rates are high, home prices are up. Like, you know, like how do we help, you know, buyers understand that like it's not as scary as what it may appear to be?
Just conversations.
Yeah.
Yeah.
Right.
Just
got to start a conversation.
Yeah.
That's simple, man.
Have a chat.
That's what I tell people.
Sit down, talk with someone, ask questions, be open-minded, but also understand that you don't have to make a life or death decision during this interaction. This is not a make it or break it moment.
You're not going to a car lot and like, buy this car, buy or die.
For today only. Dude, get out of here.
I know.
Like, hey.
That's what people need to know, man.
Yeah. Like, don't get shoveled into this like ditch of like you can either never own a home ever, or you can decide to work with the one agent that you've come across and buy this very particular home and do it today.
Right now, in the next 30 minutes.
Yeah. Like, hey, I'll be back in like 5 minutes. Tell me what you think. Like, dude, this is a huge decision.
Right.
Like, you need to learn about what it is to own a home, all the things that go into the process.
Yeah.
And you need to learn more about your finances. Most
you need
buyers
to learn
need
to
to
save a little bit, man.
Yeah.
Dude, this is a thing I'm coming across. I came across it with 3 different clients today, man. They got less than $500 in their bank account. And I'm not knocking anybody like, dude, I get it. Like, some people might be just like, hey, I'm looking
Groceries are expensive, man.
Hey, man, eggs are getting up there.
Yeah.
And I get, like, if somebody's coming to me and I don't want to scare anybody off and says, that's all I got and I want to buy a house. Well, that shouldn't scare you from having a conversation with me, but just know you may not be ready to buy a house. Like, you may not be ready to start looking for a home today. Don't go online, find a house, fall in love with it, and then go try to find a lender to get pre-approved if you only got a couple $100 in your pocket.
You're talking about half the conversations I have every day.
I know.
Because, you know, we deal with a lot of first-timers or people, because the internet's awesome.
Yeah.
You can see all of the houses for sale everywhere.
Yeah. And you can click and buy one.
Yeah, kind of.
Put it in your cart.
Yeah.
Ready to go. But yeah, so I had 3 conversations like this today with clients, man, where they all had $500 or less in their bank account currently to their name, and they wanted to buy a house. And like, one of them did admit, they said, hey, I just wanted to have this conversation with you. I don't know if I'm ready to buy a house. And so I love that. Like, hey, help me figure out what I need to do to get me there. And I said, perfect, man. Well, first and foremost, you know, we talked through all the stuff, but hey, we need to get you on a little bit of a saving strategy.
Yeah.
You know? Even if you're doing 0 down, even if you got a 0 down loan and the seller's paying your closing, and you got enough money for a home inspection and appraisal, you still don't want to get into when you close on that house, man, you don't want to be broke.
Yeah.
You don't want to have no money.
Especially,
you don't want to have no emergency savings.
Especially if you have a situation, which is most of them, where you're buying an older or like
something's going to go wrong.
New house.
It's not a matter of if, it's a matter of when.
We had a monsoon like 2 weeks ago.
Yeah.
Half the basements in the county flooded.
Yeah.
And they were good basements, but we got like, what is it, like 12, 14 inches of rain?
100-year flood kind of situation.
Well, I saw an arc going down the highway.
Oh, yeah, dude.
And that's just an act of God, but most of the houses that got flooded, they weren't in flood zones.
No.
So you know what they didn't have? Flood insurance.
Yeah, right.
So you just had to suck it up and deal with the damage. And
it was that's a rare thing. Like, I tell most buyers, man, that situation is super rare.
That flood was rare. But things like it aren't necessarily that rare, because you have high winds, you have fire, you have flood, you have
hot water heaters go out, HVACs go out.
HVAC is a big one. Because it gets hot in the summertime, but then you also have other electrical issues, plumbing issues, like if that house has a cast iron, you know, sewer drain or just other stuff like that, or you're kind of dealing with maybe some improper DIY stuff that was done before because it's not a brand new build. Like not everybody uses licensed contractors to do their stuff.
Right.
So they're like the instances.
Especially not in Kentucky.
I know. So, but like the type of situation that people found themselves in with the flood itself was rare. Instances like it are not. Being a homeowner means you have to prepare for something like that. You have to have thousands of dollars like in your savings account that you're not fussing with.
Even if my barrier, I'm like, you need, if you close, you got to at least have $1,000 in your savings.
Dude.
And I'm dude, that's a
lot. Stretching it.
I know, right?
Stretching it.
I know. And that's what I'm saying. That's what I'm telling some of these people. So I'm like, man, you can't, like, even if we do 0 down, because I'm telling them, hey, you're going to need $1,500 for a home inspection, appraisal, earnest money deposit. Yeah. And then even if you do 0 down and the seller pays, but so you're going to close on that house and have $5, the only money you're going to have is $5 to your name and you're waiting on your next paycheck. Yeah. That is not how you want to go into home ownership. And it's like, what you need to do is you need to figure out a way to save, because it kind of is a skill, man. Like, unfortunately, and most people don't get taught it. So either you learn it on your own, or you have to, once you get older and become a grown up, you have to figure out how to do it. Yeah. You know what I mean? Like, you know, so you have to like attain, okay, this is not, you know, you acquire that skill, right? It's just budgeting. Like, I'm going to put my money here every week. I'm going to have, you know, this amount go here, and this is going into my savings account. And I just, you know, I see it day in and day out. I mean, don't get me wrong, man. We close people all the time where they close and they got no money left in their account when they close. I've given them this advice. I'm not going to say, no, I'm not doing your home loan, but I still want to try to help them make smart financial decisions, you know? So I don't know.
That's the difference between being an advisor and a used car salesman.
Right. Absolutely. Really. Yeah. Yeah, man. Yeah. And I'll tell people all the time, and don't get me wrong, I know that I've lost clients this way. I tell them, like, hey, man, like, I think you are almost there, but we need to wait. Like, most people, if they've got the money, they've got the credit, they should not wait. They shouldn't wait on things like rates or home prices to come down. But if they don't have,
you should be waiting on your savings, though.
Yes, exactly. If your money's not right, you got to wait on that. You know what I mean? Like, so let's get your money right. Let's save. Let's wait. If it takes you 3 months, 6 months, let's come up with a plan. Can you set aside this amount every month? Can you set aside $500 a month for the next 6 months? You know, can you do that? Now you got $3,000, right? Yeah. You know, so we try to come up with plans and structured plans like that. Now, what happens, you know, I'll tell people, not that I'm telling them, no, I can't do it or anything. Like, yeah, I could probably do this for you now, man, but I don't know that's wise. You know what happens. I know it happens because I've followed up with these people before, and they're like, well, we went to this other guy and he did it and we closed, and, you know, so I lose clients that way, man. And I'm like, dude, I was just trying to help you, man. I could have closed your deal. I was just trying to give you a better path. You know what I mean? Like, and I'm, you know, I'm not abrasive about it. I'm straightforward. I'm pretty direct, but I'm not, like, I understand.
But compare yourself to the rest of the industry. Like, your approach and how you're communicating the potential risks for closing on a property that will make you house poor.
Right.
Or put you in a big position for risk. And then compare yourself with maybe, you know, 10 other mortgage brokers or even MLOs, because that's who they're talking with.
Right.
Is their approach going to provide not just green lights, but also like, hey, this is what could go wrong? Yeah. Are they doing that? No.
No.
Probably not. So like
not.
if they if they shop around, they talk to 10 different dudes. Yeah. Or say 2 other guys. Yeah. Like, you're gonna seem like an asshole.
Absolutely. Absolutely.
And I think that that's just kind of the cross we bear.
Yeah.
Trying to be a little bit more comprehensive. And I think we talked about this in episode 1, is just kind of keeping your soul a little bit.
I can't do it any other way.
Yeah. You know? You got to say it.
Yeah. Yeah. And I think, though, once you get yourself, that's the thing, man. Like as you become more, like, I think, though, like, you will lose clients, but I think you gain more in the long run. And I think the universe rewards you for stuff like that. It kind of sounds woo woo. Yeah. You know what I mean? But like, I think the more
putting that back in the universe.
Yeah, man. Yeah. Putting that good juju out there. You know what I mean? But I think when you take that approach, that a lot of people, like, your clients will respect that. You know what I mean? And they know, like, especially if I tell somebody, hey, dude, I could do this for you now, but I think you're going to be better off in 6 months. Like, I'm not trying to get a sale right then and there, you know,
Yeah.
and they see that. Like the smart ones understand that and they see that, right? They're like, this dude's actually trying to help me come up.
Even if they're not smart, they're still like, they can tell when someone's trying to sell them something.
Yeah, absolutely. And in my industry, people see it with the finance. What I do is technically a sales role. And there are salespeople in our business, dude, and they will do that. Whatever it takes, they're going to do it, you know. And I find that gross and disgusting, to be quite honest. And I'm not going to operate like that.
We work in the same industry, kind of. I mean, we're both commission based, and we both make money when deals close.
Right.
So we have counterparts and peers, colleagues within our industries that you can take this one or two ways. You know, you can kind of take the weight of the transaction that you're doing or the weight of the task and really give it its appropriate amount of gravity. Like, all right, this is not, we're not messing around here.
Right.
Or you can put on a big smile and be like, hey,
I got you.
If it bleeds, we can kill it. You know, that's the mentality where you're just like kind of like a hunter killer, like, you know, and there are guys that put up,
that's it, like 1980s, 90s, like sales.
Yeah.
You know.
What are you talking about, baby?
Yeah.
And
buy or die,
hey,
you know what I mean? Like
that's
Wolf of Wall Street kind of, you know what I mean? Like,
yeah. And I see why older folks have parents come with them.
Yeah.
To meet
they're
with
defensive
us.
because they've dealt with those kind of people.
That's where it comes from. It comes from a place of love. It comes from experiencing used car salesmen who don't sell cars. They sell houses and home loans. Right. And they're just like, you know, like whatever you want to hear. And, you know, they will play your favorite song all the way down to the poorhouse.
Yeah.
And
100%.
Yeah. So,
yeah, the first mortgage company I worked at in 2005, man. And some of these guys were great, don't get me wrong, but the company I worked at, it was kind of a call center atmosphere, and they would go out. I eventually became a manager here, but I wasn't recruiting that way. But the people that would recruit for new people, for new loan officers, they would go to car dealerships to look for people to sell. They wanted salespeople. Yeah. That's all they wanted, man, was salespeople. Like, and so of course when I'm working in this environment, I'm a young guy, and you know I'm seeing, and it's like I got a bunch of literally used car salesmen. I hate to use that word because not every use. I don't want to box people in that way because there are a lot of good car salesmen.
Stereotypes exist for a reason. Like, hey, if you're a good car salesman, like this obviously doesn't apply to you.
Right. Good point. Yeah, good point.
You know,
and so like you know, I did see a lot of that, man. Now most of those people did not. When I got in in 2005. Most of those car salesman type people did not make it through the 2007, 2008 mortgage crisis. I'd say probably a large percentage of them got out because the aftermath of that was a much larger barrier to entry. There was no barrier to entry at that point. Yeah. Like it was nothing, dude. No barrier to entry. Then you had to take 20-hour course. You had to take a really hard exam. Yeah. And so people were just, they're not, you know, once you put those barriers up, you know, it starts to filter people out. And it did. It filtered a lot of people out. Now you saw some of those people probably come back, you know, especially during COVID, especially when things start to get, you know, fruitful again, you start to see that. But we've seen that over the past 2 years, you've seen that dramatically filter out. I don't remember what the numbers are. Dude, it's dramatic. The people in the mortgage industry, how many have left the industry? I mean, it has been.
If you think it's dramatic. Hard, I mean, like think of my industry. My attrition rate's high, and it's real estate's the sexy part.
I know. Yeah. Do you see that? Like I've been hearing that too. That on the real estate side, like that number's coming down. But like, are you noticing that? Maybe I'm just not paying attention enough. But like, just in our market, I'm trying to look at our market. Like, hey, how many people that used to be agents a few years ago are no longer agents?
I mean, I started in 22, so
right. Like, but do you know? Are there people that you know that were agents that are now no longer agents?
Yeah.
Really?
Yeah,
okay. Maybe I'm just not noticing it.
That aren't going around anymore. That aren't doing the thing. Yeah.
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 Not seeing them at all. Maybe do they put it in escrow? Maybe do something where they can sell one house a year.
I think half the people that I knew, like maybe either worked with or knew around town, like aren't doing it.
Just completely got out.
I've just not heard of them, or like done a deal with them, or you know, like
not seeing them out there.
Yeah, they're not out there. So I mean, maybe they have a license,
but they're not really.
But they're
practicing.
not doing deals.
Yeah.
Just it's hard out there sometimes.
Yeah. 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 Absolutely, man.